Welcome to OpenECRI's Trader Training. My name is Toby Gennaro. What I'll be talking about today are commodities and Forex futures and why you may want to trade them. So if you're unfamiliar with trading these markets, I'll talk you through how to get started in futures and what's required. Let's take a look. Let's begin with an introduction to the futures markets. Most markets today, whether tangible or intangible, have a futures market. The most active popular markets are broken down into the metals, like gold, silver, and copper. The energy sector, with crude oil and natural gas. And then you have the foreign currency market, with all the major world currencies. And I'll give you some detail on each of these markets as we move forward. In the metals market, you have a lot of activity around commodities such as precious metals like gold, silver, and even platinum. Some of these metals have industrial uses, like platinum in the automotive industry for the manufacture of catalytic converters, and copper has a very strong industrial demand in residential and commercial building. Gold, on the other hand, is typically a safe haven in bad times or times of economic uncertainty. Gold's industrial uses are seen mostly in technology components, electrical, and jewelry. And even more recently, silver has become a widely traded commodity due to the popularity of gold. So to trade these various metals, the futures contracts are available on both COMEX and Nice Life exchanges. Here's a look at some of the most popular futures contracts available in metals and the corresponding trading symbols. The larger contracts being the GC, the SI, and the HG for gold, silver, and copper, respectively. And for those looking to trade a smaller contract on gold and silver, the YG and the YI are very liquid futures contracts available through the Nice Life exchange. The main difference being a substantially lower value and quantity per tick, which enables you to trade multiple contracts and control your risk better. In the energy market for crude oil and natural gas, these contracts are listed on the NYMEX exchange. There's a lot of popularity in the mini contracts among retail traders, especially the QM and the QN for crude oil and natural gas. On this chart, the dollar value appears larger for mini crude than for the full-size crude oil contract, but the tick size for the mini is essentially 2.5 times larger. This enables you to trade crude oil for about half the value of the full contract, which gives you a lot more flexibility in managing your risk if you're trading multiple smaller contracts as opposed to one large contract. In the foreign currency market, there are actually two ways to trade FX. You can trade either the spot market or the foreign currency futures. The dollar index is worth mentioning here since it is a very useful tool for foreign currency traders, being that it is a gauge of the US dollar measured against 6 major world currencies. If you're looking to trade foreign currency, the dollar index is a very reliable benchmark of the US dollar. Foreign currency traders use this index to measure the dollar's weakness or strength in the general trend of US currency. So by tracking this index, you'll get a better sense of directional bias with those foreign currencies paired to the US dollar. The dollar index is one of the most popular contracts on the ICE exchange and is only traded electronically. The most popular foreign currency futures are for the world's major economies such as the euro, the yen, the pound, the Aussie dollar, and the Canadian dollar. The CME exchange is going to be your primary source for these contracts, and they are fully accessible through the OpenECRI platform. So if you're interested in learning more about futures trading, check out the OpenECRI website under Education and look for other trading videos and webinars, or you can call customer service for more information and educational events. Thanks for watching OpenECRI's Trading Education.